What's up, guys? The market is crashing. 5% down days on the S&P 500. In my last video, I talked about there being a large spike down on the market, which would provide at least a short covering bounce or a dead cat bounce in a longer term downtrend. So that's what we're looking for this week. I'm going to hop into the charts, give you a breakdown of some plays that we had last week, and then I'll hop into some new plays and what to look out for this week. So taking a look at what I posted here in the Discord. If you want to join, it's all down in the description below. But on Wednesday, April 2nd, we were actually betting on SPY puts as well as Bitcoin or IBIT puts. And we continued to scale throughout the day, and we just kept scaling in as the market was rallying because we were calling the market's bluff. We did think that prices were going to move lower after the tariff announcement. And although there was a first fake out when Trump said 10% global tariffs, but then when he showed all the boards of reciprocal tariffs across all the different countries, there was a large sell that day. And ultimately, we ended up closing out of SPY puts for 3.5 times our money, and then a few remaining positions for 3.8 times our money. And unfortunately, we didn't hold until Friday, because who would have thought that there would be 3 standard deviation type moves in the market with 5% drops back to back. Those 3.8 times bags would have been probably closer to 20 times. So we would have made a lot of money there. And then on Friday, we did try to play a bounce. There was a bounce right before Jerome Powell, but unfortunately, he really just said that he's going to wait and see how things transition through all the tariffs, and then the market sold off into the end of the day. But we did reposition quite a bit. We are still holding. We did take some losses there on those calls, but we are still holding for the 8th, the 17th, and even the 11th. So I do think there is going to be a counter trend bounce. But let's just hop right into the charts, and I can just give you a rundown of why I entered into those puts in the first place, and then I'm going to give you the best possible setups for this week. So taking a look at the S&P 500, you can see these two really big gap downs. Price is now at 505. I think after hours, it ended around 502. So it closed near the bottom on the day. It just sold as much as it possibly could. And you can see it even is coming back down to retest that level from the August 5th low around $506. Now, I do think that this move is very much overextended. You don't see something like this often. Probably the closest time in memory is even all the way back past 2022, all the way back to the COVID crash, where you had these really large gap downs. As you can see here, these really large gap downs of 2 days in a row. But ultimately, you see that there's these really large rallies as well, because price can't continue to go down. At some point, the people who are short the market begin to take profit. There's also some dip buyers, and then you have this counter trend. And that's what we were really trying to look for on Friday. Now that tariffs are being announced to take effect, those reciprocal tariffs will take effect on April the 9th. You started to see a drop in Bitcoin. I've been talking about this 74K level for a period of time. You can see that this is the drawing that I posted, and it's starting to fall towards that 74K level. We could see it bounce on this lower trend line, somewhere around that 73, even 71,000 range, and then push to the upside. So I'd be looking to take profit on those Bitcoin puts that I still have, and then maybe even potentially play a bounce there. But this move might come really quickly. But going back to the S&P 500, we did have those 2 big gap downs on this couple days that we had here when the market was floating. When the market was floating up from here, we were actually buying puts through all of this. And you can see because it's on really low volume. And as we were just floating higher and higher, this was in somewhat of a bear flag, as you can see. So, usually when you have an uptrend and it's on lower volume, that's a signal that buyers are not really stepping in. It could be a complete fake out. And we came back up and retested that trend level. And I have it a bit cleaner here on the futures, or the index rather, you can see here on the daily, price came all the way back up, didn't quite hit this lower trend line, and then it came back up, even pushed a bit higher over it, and then that was basically a bear trap at that point once we closed back under on the day. And then, we were pretty much short from there and we pushed lower. Now we are coming up on a lot of key support zones. You can look at volume profile to get an idea of, where actual volume in business has been done before. And you can see that here on SPY, if we look a little bit further back in time, you can see that this is a pretty big volume shelf and we're starting to drill through it. But there was two gaps that were formed all the way back in April of 2024 and May of 2024. We actually hit the first gap here, and then after hours, we traded a bit closer to this gap. And like I said before, when you have these bull gaps that remain open on price, those will act as a level of support. So I do expect these zones to hold at least momentarily. Because Bitcoin is selling now, there's a really high chance that we could actually see another gap down tomorrow. But I'm still looking to play the upside because the market can't move in a straight line. You're going to have a really strong bounce at some point. But ultimately, if we bounce from anywhere in this like 496 to 510 zone, my targets really are going to be around 526 because that's where this previous gap is that you can see here, that from when we dropped on Friday, this will act as a certain level of resistance. 526 will be my first profit target on these calls for April 11th. And hopefully if we do start to push into this, I'll probably start to hold a bit longer. There is a low volume gap here, so we might actually fill in this zone for a period of time before we maybe make a newer low. But ultimately, I'd like to see it come back and retest the breakdown of this green trend line because that's what we had on Thursday. It broke down, came back up, retested that line, and then it rejected. We probably should have just played puts once we saw that this was rejecting and held those overnight. We could have made a lot of money there. But ultimately, we tried playing calls here, and we had that one rally throughout the day right before Jerome Powell, but ultimately it just couldn't play out. We even couldn't break over this into the end of the day, and we just sold in the close. Now that VIX is 45, and you can see it's actually consolidating really nicely here on the 15-minute chart. So that indicates to me that volatility could actually end up going higher. And just like in COVID, it actually did stay up there for a period of time, for a couple months before ultimately falling all the way back, a complete retracement to where it had this initial gap. It took, from all the way from February to August to actually get all the way back down there. So you can play UVXY puts to the downside on volatility on really big up days because volatility is going up one day, it could actually just drop back down to like 30 on the next day. And it might just spaz out for a period of time until April option expiration week, which is 2 weeks from now on the 17th. And once all of those put options expire, then we could actually see another rally in the market. So I do expect more volatility over the next 2 weeks. There's going to be a lot of up and down as the markets really try to find a footing because tariffs are like a new paradigm, right? It's not necessarily like evil or anything like that. I know there's a lot of people out there talking about it, but I would say that it's really just changing the landscape of how countries do business together. I think that Trump is using them as a negotiation tactic, and over time, he'll probably come to the table and try to negotiate. Hopefully these other countries lower the tariffs on the US, and then we'll also strike a deal with them and lower our tariffs as well. But ultimately, it is going to be a big repricing on a lot of the Mag 7 stocks because they've been building products overseas for really cheap. And if these tariffs persist for any prolonged period of time, that is greatly going to influence how Apple or Nvidia, like a lot of these companies, what their profit margins are, what their earnings are, and ultimately what their stock price is. So this could take a year. It could even take up to 2 years to play out, just depending on how much damage is done. We've always been on like the tip of a recession, and because now Trump is cutting government spending and jobs, that will start to spill over into the economy over time. We're not plugging our GDP with just government spending and debt and ballooning the deficit. Trump's really trying to roll over the debt in as an efficient way as possible without causing a recession. I just don't think it's avoidable. So what that really means is like NVIDIA, all these different companies, the best position that you are going to be in over the next 6 to 12 months is probably cash, because like most stocks that keep going higher and higher, and people are like, geez, I didn't think Palantir would go all the way to like $300 billion market cap, and those things, prices can go up way higher than people's expectations, but they can also go way lower than people's expectations. So like NVIDIA, although there's like a low volume gap here, it actually gapped down below it. We're probably going to head towards this like 74 level in the next like month or two. You know, there's probably going to be a bounce and things like that, but like over time, this could take, you know, a couple months, even like up to like a year or 2 years to really play out and find a bottom. You can see like even $50 could trade on NVIDIA. It sounds crazy, but we just really don't know the extent of the damage, and if the Fed is going to step in and start lowering rates. Are they going to print money? Are they going to provide a lot of liquidity to actually get asset prices back to where they need to be? Or are we going to go into a deflationary event for an extended period of time before they start to ease once again and kind of like reset the economy, hopefully get the debt under control and all of those things? But enough of me just ranting about that. Really what I'm looking for is this bounce, right? So I'm looking for this 526 level to trade. It's going to happen quickly if it does, right? So like the market is very volatile right now. Price is moving very quickly. It's not only going to go straight down, but it might even go straight up. And that's what I'm really looking for, right? We've had 2 really solid down days in the market. What are the odds or probability that we have another third day of a down day in the market? It's certainly possible, but it's far less likely that we'll could just continue to fall and fall and fall, and no dip buyers are going to step in and no shorts are going to take profit. And really like another thing that I'm looking at is TLT. So like I'm long TLT. I took some profit on some leaps yesterday. I think it'll like reset a little bit, but ultimately they're going to lower rates. So like treasuries are going to go up in value because rates will drop. But you could see like back in the COVID crash, you had these really crazy moves that was happening on TLT. And that's because the central banks don't have a line open with other banks. And so it was like companies needed liquidity, but there's a complete lockup in the market. And so prices were just like going higher and higher, like with bonds, but then asset prices were dropping. And that's because like these companies were essentially getting margin called. They just were taking on more and more losses, and options were going more and more in the money. People were just slamming put contracts, and it was forcing option dealers to continue to sell stock short. And then after March option expiration week, you had a bottom, and then the market pushed to the upside. That obviously they were easing and everything at that point, but really it took until all those options rolled off for the market to have that rally. So I hope that makes some sense. Like I'm actually dropping a bunch of knowledge here that probably not a lot of people know about as far as like market dynamics. So maybe rewatch if you need to, because that's very important about how the market is set up, where option expiration can influence when you actually find a bottom or when you find a top. And a lot of times, because those shorted shares on put contracts, once they roll off, they have to buy back the shares, right? When you're short shares to close your position, you have to buy back shares. And that's what happened back in March of 2020. Obviously, like as steep as this dropped, kind of as steep as it rose to the upside and even broke over all-time highs towards the end of the year. In September, we were breaking all-time highs again. So if there's like a really strong circuit breaker type move and we like drop all the way down here, it's almost certainly that the Fed will step in on some level to provide relief, because the market can't just keep circuit breaking to the downside. They'll step in some way, and then probably like after options expire in April, the move into May might be a stronger bounce. And then obviously we need to stay and pay attention and be aware of what's going on with tariffs, trade war, all those things. Because now like China is trying to raise tariffs and even potentially Europe. So we got to just see how all of this plays out. So I hope you enjoyed this video. There's a lot going on in the markets. I'll continue to post, but make sure you guys subscribe, like, join the Discord, and I'll see you in the next video.